Welcome back to the channel. I have a confession. I have an abnormal obsession with data. I pretty much record anything and everything with respect to our personal finances. From monthly performance tables to share prices and yields and everything in between, I tend to record and analyze. And one of the reasons I started this channel was to share this data to show others how a real life share portfolio looks and also help reinforce specific financial concepts. And today, that concept is volatility. Please note, the information on this YouTube channel and any links provided is for general information only. Please take the time to read my full disclaimer in the video notes. Does volatility equal risk? Risk and volatility are sometimes used interchangeably. However, they are not the same thing. Depending on who you ask, risk can mean different things. To me though, risk is the probability that I will lose some or all of my money, whilst volatility refers to the short-term gyrations in our portfolio value. A typical portfolio is up one day or month and then down the next day or month. And as I read once, and I can't remember who actually said this, volatility is the price of admission. If you want returns on your money, then volatility and all of its psychological impacts are accepted as being part and parcel of the deal, which is why diversification is touted as such a good thing. Spread your investments within asset classes and invest in uncorrelated assets, and you have less chance of losing all your money. And it's easy to say, no worries, I'll be sweet. If I know share markets go up in the long run, I'll just buy the dips. Easy to say in theory, but when you are faced with 10% declines in one day, like 17th of March 2020, I find I tend to curl up in the fetal position and pull the covers over my head. And the more your portfolio grows, the more, in absolute dollar terms, it gyrates up and down, even though the percentages are the same. So volatility can be our friend. Upwards volatility, the value of your portfolio goes up, or our enemy, downwards volatility, where the value of your portfolio goes down, which invites demons into your psyche. Rationally though, downwards volatility is our friend as well, as it provides a cheaper entry price for investing. This is why I wanted to show you what volatility looks like in practice, particularly now that our portfolio has grown to a level where the gyrations can, quite frankly, be terrifying. So as your portfolio grows, and particularly if you track your portfolio over shorter time periods, you need to be prepared for larger absolute value changes. If you like the channel, it would be really great if you could like this video. Every single like helps immensely in supporting the channel. So let's take a look at the actual data for each year, 2018 to 2021. And please note this data is for the shares component of our portfolio only and excludes superannuation. 2018 had 4 negative months, February, March, October and November, with October being a bit of a doozy with a monthly portfolio change of negative $30,000. The highest positive return month was August for a gain of just over $8,000. 2019 was a great year for shares. We only had one negative month, which was August, and this was only a negative $2,400 change to the share portfolio. The highest positive return month was November, a gain of just over $41,000. And then came 2020, and we all know what happened. We only had 3 negative months, but February at negative $67,000, and then followed by March at negative $154,000. Well, I have no words. It just all happened so quickly. The highest positive return month was November, a gain of just under $70,000. I think it's fair to say that I don't think I've ever experienced such a volatile year for shares as I did in 2020. 2021 year to date in comparison has been pretty calm, with only 2 negative months, January and February, for a combined change of negative $7,500. Our highest positive month has been achieved in May, a gain of just above $38,000. Okay, so some pretty charts showing that for 75% of the time we enjoy positive monthly changes in our share portfolio. So what? Well, I'm now going to measure our portfolio volatility using a mathematical concept known as standard deviation. All this shows us is the value range where I can expect the monthly change in my portfolio to sit 95% of the time. The results are quite revealing. So I have just used the standard deviation formula in Excel, and from this formula we can derive the upper and lower values of our range. Once we have these values, we can then calculate the total range, which is simply the upper value less the lower value. For example, in 2018, 95% of our monthly share portfolio dollar value change occurred within the range of minus $22,732 and positive $17,820. Looking at the actual data, we can see 2020 was the most volatile year, with a 95% of monthly portfolio changes falling within the range of negative $112,637 and positive $117,875. This equates to a total range value of $230,512, and this can be quite terrifying to experience. Overall, for the period between January 2018 and June 2021, a period of 42 months, 95% of the time, our monthly changing portfolio value sat between negative $60,913 and positive $74,515. This is a total range of $135,429. So there you have it. As your portfolio grows, be prepared for some pretty large gyrations in your portfolio value in absolute dollar terms. And also be prepared that you don't know how you will react until you experience these large swings in value, particularly if you are solely living off the income and or capital of your portfolio. The importance of the psychology of investing and money cannot be overstated. I hope you enjoyed today's video. Please like the video and comment, and please subscribe to the channel if you are interested in further videos. Thanks for tuning in and hope to see you soon.